Ever wondered how to start investing? Today we'll explore the basics. Investing. It's a word that can conjure images of Wall Street tycoons, high-powered meetings, and stacks of money. But it's not just for the rich and powerful. In fact, investing is a key tool for financial growth, and it's accessible to everyone. If you've ever dreamed about growing your wealth, achieving financial independence, or simply securing a comfortable retirement, investing can be a gateway to those dreams. But what is investing exactly? At its core, investing involves putting your money to work for you. It's about purchasing assets that you believe will generate income or increase in value over time. It's a way to potentially build wealth over the long term, and it's a crucial part of any sound financial plan. One of the most common ways to start investing is by buying and selling stocks. Stocks represent ownership in a company. When you buy a stock, you're buying a piece of that company. If the company does well, the price of the stock may go up and you could sell it for more than you bought it for. That's how you can make money. Of course, investing isn't without risks. The value of stocks can go down as well as up. But with careful research, thoughtful decision-making, and a bit of patience, investing in stocks can be a viable way to help grow your wealth. Investing can seem complicated at first, but don't worry. We're here to break it down for you, to help you understand the basics and get started on your investing journey. We'll talk about what stocks are, how to buy and sell them, how to monitor your investments, and where you can continue to learn and grow as an investor. So, are you ready to dive into the world of stocks and start building your financial future? Don't let the jargon or the charts intimidate you. With a little knowledge and a bit of courage, you can take control of your financial destiny. Ready to dive into the world of stocks? Let's get started. Before we dive into buying and selling, what exactly are stocks? Let's break it down. Imagine a company as a pie, and each slice of that pie represents a portion of the company's total value. These slices are what we call stocks. When you buy a stock, you're essentially buying a piece of that company's pie. Now, why would a company slice up their pie and sell it to you? Well, companies issue stocks as a means of raising capital. This capital can then be used to fund new projects, pay off debts, or expand the business. By owning a stock, you own a part of the company. This means you have a stake in the company's success. If the company does well and its value increases, the value of your stock, your slice of the pie, increases as well. Now that you know what stocks are, let's learn how to buy them. Buying stocks is simpler than you might think. It's a process that has been made increasingly accessible with the rise of online platforms and apps. However, the ease of buying should not overshadow the importance of understanding what you're investing in. First things first, you'll need to open a brokerage account. This is a type of financial account that allows you to buy and sell stocks. It's like a bank account, but instead of holding cash, it holds your investments. There are many online brokers out there, so take the time to compare their fees, services, and reputation before making your choice. Once you have your brokerage account, you're ready for the next step: researching stocks. This is where you'll need to put on your detective hat and dig into the financial health and prospects of the companies you're interested in. As an investor, you'll want to understand a company's business model, its competitive position, and its financial performance. There are many resources available to help you with this research. Websites like Yahoo Finance and Google Finance offer a wealth of information on company financials, news, and analyst ratings. You can also find annual reports and other official documents on the company's own website. Now, when it comes to selecting a stock, don't just follow the herd. It's easy to get swept up in the hype of a hot stock, but remember, investing is not about following trends, it's about making informed decisions based on solid research. So you've opened a brokerage account, you've done your research, and you've picked a stock. Now what? It's time to place an order. There are two main types of orders you can place: a market order and a limit order. A market order is an order to buy a stock at the current market price. This is the simplest type of order, but it doesn't guarantee the price you'll pay. The stock's price can fluctuate between the time you place your order and when it's executed. A limit order, on the other hand, is an order to buy a stock only at a specific price or better. This gives you more control over the price you pay, but it also means the order might not get filled if the stock's price doesn't reach your limit. Remember, buying stocks isn't just about making a quick buck. It's about investing in a company's future and in your own. So take your time, do your research, and make thoughtful decisions. You've bought your first stock, congratulations, but what happens next? Investing doesn't end at buying stocks. It's crucial to keep an eye on your investment. Now let's delve into the hows of monitoring your investment. Let's start with monitoring stock performance. Each stock has a ticker symbol, a unique series of letters representing the company. By entering this ticker symbol into any financial news site, you can access a wealth of information about the stock's performance. You'll see the current price, the day's high and low prices, the volume of shares traded, and more. These numbers give you a snapshot of how the stock is doing right now. But it's not just about today's numbers. Look at the stock's performance over time. Is the price trending upward? Does it fluctuate wildly? A steady upward trend can be a good sign, while high volatility might signal risk. Now let's talk about reading financial news. Why is it important? Well, the stock market doesn't exist in a vacuum. It's affected by everything from corporate earnings reports to geopolitical events. By staying informed about these factors, you can get a sense of the broader context for your investment, and understanding market trends is another key aspect of monitoring your investment. Is the tech sector booming? Are energy stocks falling? These trends can help you understand the forces driving your stock's performance. But remember, investing isn't about quick wins. It's about patience and long-term thinking. Stock prices will go up and down in the short term, but over the long term, a well-chosen investment can grow significantly. So don't panic if your stock has a bad day or even a bad month. Stick to your strategy and keep an eye on the long-term trajectory. Monitoring helps you make informed decisions. Decisions like when to sell your stocks. So, keep track of your stock's performance. Stay informed about financial news and understand the market trends. And above all, be patient. Your journey in the world of investing is just beginning. Selling stocks is as important as buying them. It's where your investment pays off. The art of selling stocks is about timing and strategy. Just as you consider a multitude of factors when buying stocks, the same applies when it's time to sell. You might decide to sell a stock for several reasons. Perhaps the company has fundamentally changed, the stock has reached the price target you set, or you need to rebalance your portfolio. Whatever the case may be, it's crucial to make informed decisions and not let emotions drive your actions. Placing a sell order is a straightforward process. You'll need to log into your brokerage account and navigate to the trading platform. Here, you'll input the ticker symbol of the stock you want to sell. You'll then specify the number of shares you wish to sell and select Sell from the Action drop-down menu. There are different types of sell orders you can place, such as a market order, where you sell your stock at the best available price, or a limit order, which allows you to specify the minimum price at which you're willing to sell your stock. Once you've filled in these details, you can review your order and confirm it. After selling your stocks, you'll have some decisions to make about what to do with the proceeds. You might choose to reinvest the money into different stocks, or perhaps you prefer to build up your cash reserves. You could also consider paying down debt or contributing to a retirement account. Each of these options has its benefits, and the best choice depends on your individual financial situation and goals. Selling stocks can trigger emotions, especially if the stock's price is falling. However, it's essential to avoid panic selling. This is when investors sell their stocks out of fear that the prices will fall further. While it's natural to want to avoid losses, panic selling can often result in missing out on potential gains if the stock's price recovers. Similarly, it can be tempting to hold on to a stock because you have an emotional attachment to it, even if all signs point to it being the right time to sell. This is known as endowment effect. Remember, investing isn't about emotions, it's about strategy and making informed decisions. In conclusion, successful stock selling involves knowing when to sell, understanding how to place a sell order, and deciding what to do with the proceeds. It's also about keeping your emotions in check and making decisions based on facts and analysis, not fear or attachment. Now you know how to buy and sell stocks, but remember, knowledge is power. The world of investing is vast and constantly evolving. It's not a static domain where you learn a few tricks and you're set for life. No, quite the contrary. Investing requires constant learning, staying informed and adjusting your strategies as the market ebbs and flows. Now you've learned the basics of buying and selling stocks. That's a fantastic first step. But there's so much more to discover in the realm of investing. For instance, understanding more complex topics like mutual funds, bonds, and retirement accounts can significantly enhance your financial acumen. Let's dive a little into why these are important. Mutual funds allow you to pool your money with other investors to purchase a collection of stocks, bonds, or other securities that might be difficult to recreate on your own. Bonds, on the other hand, are like loans you give to the government, or they promise to pay you back with interest. And retirement accounts? They're long-term investment accounts specifically designed to support your financial needs when you decide to retire. So, where can you continue your education in investing? There are a plethora of resources at your fingertips. Books like The Intelligent Investor by Benjamin Graham or A Random Walk Down Wall Street by Burton Malkiel are excellent starting points. They offer in-depth insights into the principles of investing. Podcasts too can be a great way to absorb information, and let's not forget this channel will provide constant recommendations on hot stocks to buy, and all the news in the stock market, guiding you through the turbulent world of investments. Don't forget to follow the channel, drop a like, and subscribe for more investing tips and guides. Remember, the more you learn, the more you grow, and the more you grow, the better your investment decisions will be. Investing doesn't just mean making money. It's about financial freedom, security, and building a future you look to. Investing is a journey, not a destination. Keep learning, keep growing, and most importantly, enjoy the ride. Let's recap what we've learned. Investing is a powerful tool that can help you grow your wealth over time. It's not just for the rich or the financially savvy. With the right knowledge and approach, anyone can become an investor. The key is to start early, be patient, and let the magic of compounding do its work. We've delved into the world of stocks, which are essentially small pieces of ownership in a company. When you buy a stock, you're buying a piece of that company's future success. Stocks are a fundamental part of any investment portfolio, offering the potential for high returns, but they also come with risks. That's why it's important to diversify your investments and not put all your eggs in one basket. We've walked through the process of buying and selling stocks. It all starts with setting up an account on a trading platform. From there, you can search for stocks, analyze their performance, and make your purchase. Selling stocks is just as straightforward. Just remember, the goal isn't to buy low and sell high in a short time frame. Instead, you should aim to hold on to your stocks for the long term. Monitoring your investments is crucial. It's not about checking your portfolio every day and panicking over short-term fluctuations. Instead, it's about keeping an eye on your overall investment strategy and making sure it's still aligned with your goals. If circumstances change, don't be afraid to adjust your strategy accordingly. Finally, we've emphasized the importance of continuous learning. The world of investing is constantly evolving, and so should your knowledge. Read books, follow financial news, stay informed on this channel, and don't be afraid to ask questions. Thank you for joining us on this journey into investing. Remember, the best time to start is now. So, take that first step and see where your investment journey leads you.